thanks, Anthony. That was great fun. Oh, thanks, Anthony. Thank you.
Hello and welcome everyone. First of all, I'd like to thank His Excellency Bandar Al Khuraif and His Excellency Khalid Al Mudaifar for putting this fantastic conference together. We have a very distinguished panel. What we'd like to do is first start with some introductions. Mr. Abdulaziz.
Yeah, Abdulaziz Fahad Al Hamwa. I'm the Vice Chairman and CEO of Modern Industrial Investment Group. We do develop, co-invest, and build industrial projects relating to the mining sector in the kingdom. It's exciting time for us with what's going on in the mining industry in the kingdom. And hopefully we can relate it to the region and the international market.
Thank you. George?
Yeah, thank you. It's George Cheveley. I work for 91, based in London. 91 is an asset management company founded in South Africa in 1991. And we're still, our main offices are in London and Cape Town. I invest in resources, funds in gold and general resources, around $2 billion in total. And I've been involved in metals and mining for over 32 years.
Kathleen?
Kathleen Kelly. My company, Queen Anne's Gate Capital Management, helps clients understand the fundamentals in commodity markets on the supply and demand side and helps them look at opportunities and risks in investing in commodities.
Keith?
My name is Keith Spence, and I'm based in Toronto, Canada. We're a private equity shop. We specialize in late-stage near development projects globally. Most of our partners are in Asia, and we spend a considerable amount of time looking at projects in this area, Africa, Latin America, and we're now looking specifically at this area in the Middle East.
And Michael?
Hi, it's Michael Willoughby. I'm based in Singapore. I'm Global Head of Metals Mining and Transition Materials for HSBC. I've lived in Japan, China, Hong Kong, Singapore, Australia, and have done deals in capital markets, M&A, all over the world. Very happy to be here.
Thank you, everyone. So maybe we start with Mr. Abdulaziz. Given that your group has built industrial projects in the kingdom with international partners, can you talk about the transformation of the mining sector in the kingdom?
Well, in the kingdom, a few years back, it's very difficult to talk about mining because Saudi Arabia is known for oil and gas and petrochemicals. But also Saudi Arabia, over the last 30 years, did a program to diverse from oil to petrochemicals. And they have done a program around it, and Saudi Arabia became almost the second country in the world in petrochemicals, championed by a company called SABIC. Today, Saudi Arabia is doing the same thing. A few years back, the government had made sure that mining is a third pillar of the economy, and they built a program around it, issued new laws, put around it several kind of incentives, unmatched worldwide, and that's why we came to invest in the mining industry here. We have built 2 industrial projects, one in the western region, one in the central region, or eastern region, central region, to service the mining industry. We are operating in full capacity, and we are going regional, which is part of the Vision 2030. All of this was done because of the incentive programs that the government have put in place. Funding came from the Saudi industrial funds, competitive funding, you cannot say cheap funding. All the procedures within the ministries, working very well. Our partner is 130 years old, first time comes to the kingdom, or even to think of the kingdom. Now their operation is the world biggest operation outside their headquarters in France.
That's excellent.
Yeah.
So George, just following on that, as you think about international investors, what are the key things that are driving investment in the mining sector as you think about it? And more specifically, what do you think the kingdom and other parts of the world can do to attract more mining investment into the sector?
Yeah, I think we've obviously come through a downturn in the mining cycle where people have been conserving capex, preserving their cash flow. We've obviously seen a big fall off in investment over the last 10 years in mining, and we've seen the consequences of that, particularly in the last year or so, where we're starting to see shortages appear. And clearly, as we've heard today many times, if we're going to make a transition, we're going to require a lot more investment. And that requires investment not just from fund managers, it's from governments, it's from all sorts of sources of capital, private equity, everything really. And I think, firstly, we need to see that improve. I think in a way, with the kingdom coming into the space and really promoting it, I think there's not only a need to promote domestic ventures, but also invest abroad, because there's clearly minerals which don't exist here, which they require. And maybe further down the line, so they need to access minerals. That involves funding companies to help develop those deposits abroad. It's also something as an investor, if we look at how we can invest in the kingdom, there is possibilities not only in mining, and we can see that with companies developing, but also further on whether they should be more processing here as well. So clearly, if you look back to Japan, many years ago, they invested in, say, a lot of copper mines around the world. They built a big smelting industry. China did the same thing, had a big smelting industry. There is that potential that there could well be, even though investing abroad in raw materials, etc., that could also then engender investment in the country in terms of how you process those materials.
And Keith, would you like to add anything to that?
Just a key point. When you're looking at where you're going to invest, with respect to political risk, that's a big issue.
And when you say political risk, what are the factors that determine?
Well, you want to make sure it's a stable jurisdiction. You want to make sure that the government wouldn't change suddenly. You want to make sure that your partners aren't tied up with a government that may be out of power. You want to make sure also that the social structure is in place that wouldn't explode in the future. But just another point I wanted to touch on, when you're looking at investments, in the past we just looked at, well, is this a good jurisdiction? Is it a stable jurisdiction? Is it a place that I want to invest? One of the things you're looking at now is the mineral a critical mineral? Is it tied up in geopolitical issues? For example, in the past, if you wanted to invest in uranium or all the new critical minerals, Canada has a list of 31. In the past, you just invested in the mineral, and if it was a stable jurisdiction, you were comfortable. But now you have to be aware that if you invest in a certain type of mineral, there are a lot of political repercussions. Our group, private equity group, a lot of our money came historically from Asia and one particular country in Asia. And now when an investment has to be made, we think about what are the issues. If you were invested in say, a traditional staple like gold, no problem. But if you wanted to invest in lithium, for example, and it was in a jurisdiction that might be stable politically, but for that particular mineral, there's no stability.
Michael, anything else from your perspective on that you'd like to add from an investor perspective? At least you hear from your clients.
Yeah, look, I think it's pretty clear, right? Western capital doesn't like risk, long-term outcomes. And you can see that with most of the majors. They use their cash flow and pay it back to shareholders, and there's very little exploration or development. And so China has largely stepped into that place over the last 10 years and done very well. And now other countries are seeing the upside from that, such as Indonesia. And a lot of that rhymes with where the kingdom is at the moment.
Yeah,
And what do you-
just one quick point on that China. The China model, I think, is a model that the kingdom could look at. The kingdom don't have to sort of reinvent itself. They can look at what China did. China went overseas, not only in China. We explored in China in the West, but China also went abroad and made investments.
So I think with the announcement today with the partnership between the PIF and Ma'aden with the New Horizon project to invest not only in the Kingdom of Saudi Arabia, but to invest internationally. George, any perspectives on that? What do you think that will do for developing the mining sector for the kingdom?
I think it's very positive, and I think it's positive for the kingdom. I think it's positive for the mining industry, because to have a new source of capital come in for projects for early stage, for companies, I think that sends a very positive signal to other investors and the industry itself. And I think, the kingdom has a lot of money, but the mining industry uses a lot of money. If you can, use that money wisely to form partnerships, to just be the catalyst for certain projects, to encourage other capital in, then you're really going to leverage up on that investment and make the biggest return and the biggest bang for your buck, really. And I think that's, this is a significant amount of capital, but it could be made much more powerful if used wisely in a variety of projects, in a variety of countries, and there will be different political risks. But to get a diversified base where you're essentially seeding or even using enough of that capital to encourage other capital in. And I think that if you can partner that way, that's going to be much more powerful than just taking over companies or trying to dominate certain industries. I think that's very
Abdulaziz.
important.
I think just to comment on what you have mentioned, it was very clear from the statement of the Minister of Industry that the Saudi Arabia market was also looking at Africa and Asia and international markets. Modern Group already have activities outside Saudi Arabia, and we will be releasing very soon a press release and a joint venture in one of the Asian countries to complement what we are doing in the mining industry in the kingdom. So it's part of the vision of 2030 that we go regional and hopefully we can be international.
So Kathleen, given your expertise, can you share your broader macro views on specifically as it relates to base and precious metals? What are your views short-term and both long-term?
So this morning we heard all sorts of CEOs and ministers talk about the risks of short-termism, Cyrus. So now you're making me engage in short-termism. But the macro environment right now is one that is not that supportive for investing in any space. What we've seen is interest rates going up around the world. Everything's basically going up. Inflation is going up. The dollar has been going up for most of the year. Costs of capital are going up. Costs of everything are going up. So it's made for a difficult landscape for investing. Normally, when you see interest rates going higher, it's because growth is very strong. But in this case, most central banks are trying to slow growth. So how do you think about investing in a long-term project when you think growth is going to slow in the short term and stay low for what could be a longer period of time? And so commodities investors are having to weigh the fact that while there is a positive outlook in the longer term, there's a more negative outlook in the shorter term. And that's going to be a struggle for these markets. You're going to see prices most likely go lower as demand goes lower and supply continues to pick up. And so this low price environment might also defer some investment in the sector.
And what about long-term views?
Longer term, there's so many different levers at work in the metals and mining industry that are going to be positive for demand. So everybody is talking about electrification, and whether electric vehicles are the majority of the solution or a part of the solution, electrification is going to involve more metals. The military buildup that you're seeing around the world is going to involve more metals. There's, all of the electric handheld products that we're using are going to involve more metals. So the demand outlook is a good one, but recycling is probably going to be part of that solution, and technology is going to be part of that solution. So I think that we will find a way to have enough metals, but over the longer term, but there will still be a strong demand for metals.
So Michael, coming to you, given your experience in different geographies, companies, what is the key to building a world-class materials ecosystem?
Yeah, look, every country wants to have its own end-to-end supply chain, and the more complex the supply chain, the less that happens. You can take the EV industry, which I think is going to look very similar to the semiconductor industry, where you have pockets of very high competence and very high market share. And then the question is, which part of that global supply chain can the kingdom play in? But I think coming back from EVs to mining and materials more generally, I mean, you've really got to look at, well, what has the kingdom got that other places haven't got? And then where can you use that to its best potential? If I look at the kingdom, it's got long-term outlook, strategic outlook, it's got capital, it's got risk tolerance, and it's got cheap power and potentially a lot of renewable power. What it doesn't have is a big domestic consumer market like China had, and what it doesn't have is a big identified resource that has yet to be commercialized, right? Like Indonesia has. And so it doesn't mean that's not going to happen. It may well happen, but in that confine, how do you harness what you have at the moment? And I think there's two parts to looking at it. One is global. What can the kingdom do to disrupt the industry globally, given that there's not that much capital coming into the industry? And you can use Korea, I think, as the best lesson, which doesn't really have the domestic consumer and certainly doesn't have the domestic resource. And they used a few things, but they used processing tech as one of their big outcomes. POSCO, Korea Zinc, that they have the best tech on the planet, and that allowed them to be more competitive than others on the planet. The other thing that they have is obviously the government support, the finance, but also the midstream and the downstream strength of global companies like Samsung and LG, and others that are really important to give them fixed demand going forward. I think the other places that the kingdom can be disruptive is in education. There were 19 mining engineers that graduated in Australia last year. That's incredible when you need 50 at least to build a mid-sized copper project. I mean, now China had 1,500 mining engineers that graduated last year. The US had about 25. So education's a big part of it. When you look at where there's choke points in various industries, like rare earths, for example, all comes out of one part of the world. Graphite as well. Well, maybe the kingdom, they're two industries where it could be disruptive in how that processing is done globally. And I think the presentation this morning from Robert Friedland on technology to solve the exploration problem here Maybe that works, maybe it doesn't. But maybe the kingdom does that with 20 of the leading companies globally and has JVs domestically, and let's see what works and what doesn't. I mean, it costs very little to use technology to improve the exploration process.
George, anything that you'd like to add to that?
No, I think the point about processing is well made. I think you've got to build up an area of expertise, and clearly, if you access materials, if you can add some value here, and there is definitely cheap energy here, and space to build it, shall we say? So I think there are some advantages here. As I said, that it doesn't all need to be invented here. You can partner with people. They are partnering with people, and I think that's the right way to go. But with the capital and a long-term view with that capital, you can really develop industries. And as I say, with the right partners, you can then also access other sources of capital to really leverage off that. And I think that's really, with the vision, the 2030 vision that they have, it's really important to think, how does that get funded? Because it's a huge commitment. And the more you can bring in other sources of funding to help in that really, and use your funding as a catalyst, it makes it much more likely to succeed.
Abdulaziz, anything that you'll add from a Saudi perspective, what your experience has been, with respect to supply chains, ecosystem that you've built, and what KSA has to offer?
Well, with the newly approved mining laws, backed by the funding availability in the kingdom, with the interest rates today, there is no way you can find any competitive funding anywhere for any project, mining or otherwise, in the Kingdom of Saudi Arabia. And this could go up to 75% in some cases, which is also, this is a big advantage. I think the market here is ready for investment. International names are aware of what the kingdom is doing, and I'm bullish on the prospect of mining in the kingdom.
So,
Just one point I wanted to mention something on that processing issue. I think that is really the big paradigm shift that we're going to see. Traditionally, the extractive countries, the big mining countries like Canada, South Africa, Australia, paid a lot of attention to the upstream aspects, extracting the raw material, maybe semi-processing it, but most of them never focused on the downstream processing. And now what you're seeing, because of the theme I mentioned about geopolitics, now most of those countries and other countries are going to start doing processing in-house. So you're going to find that the North American, for example, mining community is going to be fully integrated. You'd see a lot of processing of lithium, possibly even dirty copper. Need big smelters, etc. And what Saudi Arabia can do, being a new entrant, they've learned how to process oil. So they know the art of processing. So this is an area where they can quickly gain a competitive advantage. But processing is all the story now, because these big mining countries, they know how to explore, they know how to extract, they know how to semi-process, but they can't do much of the downstream processing, which, as mentioned, a lot is done in China and in Korea, for example.
I would say on the kingdom, which is a fact, it's on the ground now, fully integrated operation from the rock to the final product, with multi-billion dollars investment have occurred in the kingdom. So I think the Saudis have done a very good job. You can see we have maybe the only smelter of aluminium in the world that's fully integrated, from the rock to the final product. In addition, the phosphate project, which is multi-billion of dollars of investment. So I think with the Vision 2030, the integration part, outside and inside and regional, I am sure we're going to see a lot of synergies between projects, mining and industrial, from Africa or Asia within the kingdom. And I'm working on one deal right now, which is a multi-billion-dollar transaction, outside the border, inside the border, complement what you just said.
So Kathleen, from your perspective, as you advise, hedge fund, large global institutions, how are they thinking about investing in the sector? Are they thinking more on the exploration side, or is the focus more on producers?
Well, I think that there's some hesitation. So here we have a lot of very specialized mining investors on this panel, but when you look at the global investor landscape, there's, whether they're passive investors or active investors, they seem to have more of a focus on sustainability. And what I hear from clients is we know that the ESG concept is a bit muddy on the edges, and so defining what fits as a sustainable investment and what is not is there's a large gray area. But clients are talking about oil and gas as having much more potential than mining at this point, which is interesting to me. And I think the reason is because there's so much more low-hanging fruit in the oil and gas sector, which has already been attacked. There's methane and flaring, and some of it has been through legal channels, some of it is just through ambitious carbon reduction plans of companies, but those companies are finding sustainable investors coming into the oil and gas space, and that's not happening in mining yet. So I think the mining sector is a couple years behind the oil and gas sector, and I think there has to be some courage in the mining industry to make some bold steps towards cleaning the energy source quicker that they're using and producing a cleaner material. Whether it's through geothermal or with more solar, it's still to be decided. But I think there's a huge opportunity in the kingdom because of all the drilling that has been done here to combine new mining projects with geothermal and come up with possibly a mining project that actually creates more energy than it consumes. Wouldn't that be something that is easily investable?
Just on that, Saras, I mean, big banks and the finance industry look at this. This is a big issue, and I think the easy thing to do is target carbon abatement. That's measurable. Everyone can see. Coal is damaging, and so the finance industry is pushing that away, and that's great and that's noble. But actually, what the finance industry needs to do is move. In addition to that, look to facilitate capacity expansion in metals that enable the transition to happen. Simply without more nickel, cobalt, copper, aluminium, transition doesn't happen. So there's no alternative if you don't get more capacity. So carbon abatement simply doesn't happen. So we need to mature the conversation to have it less about just carbon abatement, and obviously that's important, but more about what are the things that we can put the incremental dollar, either debt or equity, into to facilitate transition in a faster manner.
Yeah, but I think what the kingdom has also done is, with the development of the voluntary carbon market, they're sort of one of the first countries to really look at that and establish that and help both producers and consumers to make sure that we are towards the greening of the environment. So I think that the kingdom is already taking that positive step. But George and Keith, you invest in companies. As you think about ESG, how do you frame your investment decision with respect to investing in mining companies, and how do you look at that ESG perspective when you're making that investment decision?
we're very clear, and we've been very clear about this over the last 2 years at 91. We're an emerging market asset manager. More of our investments are in the emerging market. We don't see the right way to do the transition or do SG is to avoid heavy emitters, as we call them, and just create a portfolio of low emission companies. If we're going to do this transition, we have to remove carbon. And to do that, you have to invest in companies which are responsible for carbon emissions and make sure that they transition, and therefore you reduce the carbon output. And that means investing in emerging markets, because the West has pushed a lot of its emissions into those emerging markets. And we're very clear that's where we invest, and that's what we want to do. And you've got to tackle the problem, not just avoid the problem or run away from the problem. So, when we look at investments, both in mining, other industries, we look both at enablers. Those are the ones that are going to produce copper, enable the transition. We also look in investing in what we call heavy emitters, those who produce those emissions or enable those emissions, to make sure that they are transitioning and going to reduce them in line with the Paris Agreement, etc. And that to us is, and there are returns to be made on both sides of that. The companies that transition faster can make very good returns, as well as those that enable the transition.
Yeah, ESG is just a rebranding of something. I used to be an investment banker with a couple of the major Canadian banks. We've always looked at environmental risk, not as because we care about the environment. It was a business decision. We care a lot about the social risk, community risk. In fact, back then and now in private equity, we've done in our database and in the bank's database, we look at projects that failed and we say, why did this project fail? It could fail for resource reserve reasons, technical reasons, political reasons. There are many reasons why a project failed. And the majority of projects failed because of the social risk, which is the S in the ESG. It's the biggest risk as a business person if you're making an investment. It has nothing to do, of course I care about it, but the hard knocks business. Because if you try to develop a project, I can name dozens of projects right now. I know two, one in Peru, one in Chile. In Europe, I know another two that are big deposits are just sitting there. And the big problem was the social risk. It wasn't managed well.
Abdulaziz, anything? We have 1 minute left, so anything you'd like to add?
I would say Saudi Arabia is part of the G20. The political system is very stable. Banks are all rated. The government itself, it's rated. Funding is available. Incentives are available. I think it's an exciting time to invest in the mining or industrial mining project, or even other project also.
No. Thank you, everyone. Thank you.
Thank you.